I always think of like when you put your money in insurance, you're able to dim your risk while you're alive, but then you're really buying cash for the future. Like for sure, earmarking money for the future that's going to be paid out to your heirs, whether that be family members, like a religious belief that you want the money to be donated to, or your beneficiary can be anybody, but you're pretty much putting a stake in amount of money that was already predetermined. And all you got to do is hold your end of the bargain, which is to fund your policy thoroughly throughout your life. And it's an asset that you can for sure count on. I like to compare it to real estate because just like you can buy a house that's 100,000, or you can buy a house that's $1 million. Each one of those, you pretty much go into the scenario knowing what the maintenance is going to be. Let's say a mortgage could be $2,000 a month. It could be $7,000 a month. You're going to predetermine that and figure out all the numbers prior to actually purchasing the asset. Same thing with an insurance policy, to where you're going to be able to know the minimum, the maximum of what you could fund the policy with. And you're, like I said, you're earmarking money for the future. It's one of the easiest assets to solidify. The best thing about the trust is that you could be specific on how much money you want to be paid out to your beneficiaries, let's say upfront, or they have to hit some type of certain qualification or age to be able to have access to an amount of capital. And then, like you were saying, put money straight from when you pass into an annuity that pays out annually or monthly to all your beneficiaries. That is an automatic, pretty much sprinkler of money that is going to be propelled out to beneficiaries for life. And that's really the main focus of today's call, is just to be aware of, let's say, the risk that does come with any investment. Know the worst side of things as well as the best side of things, and know that, or actually ask what the likelihood of like an average return, because most of the time the stock market is just on average right around 7%, but people like to promote that it's going to make 12, 15, 20%, and that's not very likely to happen every year. It may happen one out of a few years, but what's the average amount of returns you're going to receive in any asset? That should be the main focus, and prepare yourself for the storm if there is any.
Yeah.